Hello, everyone. This is Martin. Welcome back for another weekly video broadcast to let you know about the opportunities that I'm looking at. And this week we will be looking for the opportunities June 5th to the 9th. You can see that there. That's for this coming week. Now, this week should be pretty interesting. We have the upcoming British elections. That's the big showdown between the Conservative Party and the Labour Party in Britain there. Of course, the Conservative Party being headed by Theresa May, the current Prime Minister, and so that should be pretty good, pretty interesting, and can cause some currencies to fluctuate. There could be some volatility, especially with the euro and the British pound pairs. So watch out for that. Now that comes up on Thursday, June the 8th. Okay, so just keep an eye out on that, and that may create some really good trading opportunities. Okay, so having that said, let's now go to the disclaimer. Okay, just a second. Okay, here's our usual risk disclaimer, and again, the main thing here is that this video is produced for educational purposes only. I mean, even though I'm providing you with some specific trading information and ideas, always keep in mind that you have to do your own homework and decide if the ideas I present in this video are compatible with the way you're thinking and your risk management that you have implemented, and hopefully all of you have as well. So again, view this video at your own risk and decide what you want to do, what works best for you. Okay. Okay, everyone, we always start with the Euro USD, and like I said, this pair could benefit from the upcoming British elections on Thursday, June the 8th. So either price could go up considerably from here, and in the meantime, it will. I mean, this pair certainly is trending higher, and you can see what I mean by that. Here we're creating a higher high. Here's a previous high, so higher high, higher low to the previous low, higher low again to the previous low. So obviously I see this pair trending higher. It could come to this level and then turn over, or it could come all the way up to here. This line here, it's a long-term trend line, goes way back. And I also have a next resistance zone marked here with the gray rectangle. So you can see price could either come up to this next resistance and turn over, or continue going higher to about here and then turn lower. Okay, so right now you could buy as it is, and let me just take that off. You can currently buy with your stop loss would be uh, down here below this candle. You see this candle right there, okay? Or even below this if you're aggressive, below this the latest candle on that formed on Friday, okay? And that is quite a number of pips, but you would have to calculate what is the proper lot size for your risk factor, okay? And that's fairly easy to do. So just be aware that you will have a large stop loss in initially, but as the price goes higher, then obviously you can trail your stop loss higher as well, and hopefully lock in some profits along the way, right? Or just wait for a bit of a retracement. Again, you can always wait for retracement. Use the H4 chart. So let's switch to that for a second. Okay. Okay, I've got my H4, and you can see you can wait for a bit of a retracement before going higher again. Now, right now you can see this price is within a uptrending channel, okay, as designated by my upper trend line. Here's my lower trend line, so I can see certainly price going higher. Again, the MACD is starting to turn over. However, one other word of caution, we could be creating a divergence in this market. In other words, price could go a little bit higher, okay, but then turn around again. Notice the MACD, the blue line here, and if this line goes up just a wee bit and turns around, okay, I will now draw a trend line. then you see we'll have, if the MACD goes up to here and then down again, then this is called a divergence in the market. So we have the trend line sloping down, whereas price here is sloping up, okay? And be aware that there could be a big turnaround at some point soon. If one day a price is just going to, there's going to reach a limit as far as price goes higher. Um, and if it's going to turn around, the interesting thing is it's going to fall by 200, 250 pips pretty quickly. So again, just be aware that that won't happen probably in the near future, like soon, unless something weird happens with the elections and who knows. But anyways, so that's what I see for the Euro USD. Now, moving right along to the British pound. Here we have a sideways market. I would certainly wait for more evidence, but it's going sideways right now. Again, beware that the British elections will certainly impact this currency pair, the British pound USD. So if you believe price is going to go higher, then I would buy above 129.25 if we believe price is going to go higher. If you believe price is going to go lower, then sell below 128.30. Sell below 128.30 if we believe price is going to go lower. Okay? Again, uh, be considerate of the British elections coming up. Okay? Now we move to Australian USD, and you can see on Friday here, this is this huge Friday um, bullish candle. The previous day was a big bearish candle. Now we have a huge bullish candle. Again, be aware that we are kind of going sideways. There's all kinds of resistance up ahead, and price currently is within a triangle, and we call this a triangle consolidation because you see prices come down, price will go up, most likely turn around again. Um, and we may have this kind of activity in the short term. I believe price is going to go higher, but we may have this kind of activity, and in the long term, price most likely will come down. Okay, that's what I believe, but in the short term, most it will probably go up. Anyways, let's get rid of that. So that's what I see there. You can see the MACD here is below the zero, is curling up slightly, but again, my bias is the overall bias is to the downside. Okay, just watch for further evidence. Uh, Obviously, this pair is tied into the commodities. Let's take a look here at gold. Gold, you can see, is in a upward channel, and that's partially the reason why the Australian USD, the chart we just looked at, is had a turnaround on Friday. You can see on Friday here as well with this huge white bullish candle. This is gold. It also went up pretty high. So I see some further upside movement in gold, and that certainly will help the Australian USD go higher as well. Now we move to New Zealand USD, and this pair is one of the strongest ones along with the euro. Look at this. This candle on Friday is just rocketing up to the planet called Forex. I mean, once we hit up here, it's certainly it's a good payday for a number of traders around the world. But look at that. So it's been creating higher highs, higher lows, going back to the middle of May, you can see. And with this pair, I see it just going higher. Here's our next resistance area. I've already marked that in with this gray rectangle. Okay, and the only thing is, if you take a trade now, your stop loss will be large again, but you can either take a buy trade now or wait for a bit of a retracement after this big candle. Um, basically the train has left the station already, and I mean getting in would have been nice back here, but if you want to wait for retracement first, that's always a good move, or you can just take a buy trade. Make sure your stop loss is down here, and you're good to go. Okay, so That's the New Zealand USD. You can see the MACD here is starting to curl up again. We have one green momentum candle, so they'll probably, uh, like I said, I think this pair certainly is going to go higher. Now we get to the US CAD. You can see here we have, again, this is the pattern I think we talked about last week here. So price come down in a really big way, and then all of a sudden it's trending upwardly in a channel like this. Can you remember what this pattern is called? Anyone? Okay, it is the bearish flag pattern. Again, I'll just draw that in for you. So you see prices come down, okay, and you see here's the flag. It's an upside down flag, and you can see on Friday we had a big bearish pin bar from resistance. That's the gray rectangle. I believe price is going to come down. My bias is to the downside, and so I believe price is going to come down like that. Okay. Let me just remove that to clean up the charts for a second. So here, this pair also is tied into the commodities, and in particular the oil industry of Canada. So as if oil is doing good and it's rising, then that means this pair will fall. If oil is weakening and price is falling, then this pair will rise higher, conversely to the price of oil. Okay, so my bias is to the downside, and if we believe price is going to go lower, we want to sell below 134.70. Okay, 134.70 to the downside, and if we believe price is going to go higher, we want to buy above 135.50 to the upside. Okay, now we move to what's next. What's next? Oil. Again, just have a quick look. You can see oil has come down quite a bit. So um, so if oil is coming down, let's take a look. US CAD. See, it went up conversely to the price of oil. So this pair grew stronger. The price went higher, and oil came down. Okay, so you see how that works? Great. Now we move on to the US Swiss franc. Oh, wow, look at this huge bearish candle on the Friday. You can see that all week it's been coming down. And I just want to quickly switch to the weekly. Okay, so you can see this is the weekly chart, by the way. Just disregard that for a second. I just switched the chart. I didn't rewrite this information, okay? This candle is a kind of a bearish, huge bearish weekly candle. You can see also the 2 weeks before this was the big clue. Okay, guys, take a look. Price was coming down, went up, but then it was slammed right down with this huge bearish candle 2 weeks ago. That's the big clue where that tells you that price most likely was going to be heading lower. And again, you can see it's come down now all week, and we are close. This is the weekly chart. We are close to the weekly support zone here. Let me switch to the daily. Okay, so you can see price most likely will come down much further to the support area right here, and you could either sell. Let me see. Let me take a look. It's 0.9611. Yeah, you could sell kind of below 0.90. I would wait till 95.90 to be on the safe side. Okay, but so that this pair certainly is coming down. I believe it could come up in the short term. I mean, there could be a pullback, and you may want to wait for a pullback after a big candle like that. Take a look again. Always back to history. Here's a big candle down, and then we had a pullback the next day. So um, uh, so it's up to you whether you want to, if you're a conservative trader, you want to wait for a bit of a pullback, and you may want to look at the 4-hour chart for better entries, because this is end of day trading, guys, and or just take a sell trade now. Your stop loss would be just above this candle, above this moving average. Okay, and you can see here the MACD is trending down lower as well. And finally, we get to what's after the US Swiss franc. Okay, US Japanese yen. Here you can see price also came down quite a bit on the Friday, okay, and it is now sitting at support. Here's a confluence. Confluence means a number of clues that have joined together to give you a better idea, better picture of what's going on. And the confluence here is, see this gray rectangle? Okay, that is support. So price is at support. Take a look at previous price here, previous swing low, okay? It also came down to support. It's come up, now it's come down again. Testing previous support. Take a look back in history. Just follow my cursor, okay? So right here you can see the number of times price came down and bounced off support, came down, bounced off, came down, bounced off, finally broke through. Once price breaks through, this now becomes resistance. Price came back up to resistance, broke through resistance, and now once price breaks above resistance, the name changes to support. Support meaning the floor, okay? And so price right now is sitting here. If price breaks below, and I'm sorry, the confluence also is, take a look at this 200 moving average. This is major, and if you look back at price history right here, okay, here is previous swing low. Look what happened at the 200 SMA, the 200 moving average. Price came down, made a rounding pattern and bounced right up. So again, same thing. Price may come down a little bit lower and then go up higher again, okay? Uh, but however, if it breaks through, if it does finally break through support, then here is, you can see, take a look at your previous swing low. That would be the next area of support, okay, right here. So let's just remove that. A bit sloppy on my drawing, but that's the way it goes sometimes. And that's what I see. So here, the 200, again, just to repeat, the 200 moving average acts as a dynamic support. This is one of the stronger or strongest moving averages that you'll find on the chart. So it's pretty accurate. The 200 is pretty accurate. Okay, and again, take a look at the MACD. It's curling down, so you can see MACD blue line is below zero, indicating that we're in a trending lower market. So that's what I do see for the charts for this week. There could be some good opportunities. Again, pay attention to the British elections. Take care, everyone, and have yourself a really good trading week. And you can contact me anytime if you want some further information about what I do, what I teach, and my courses. Take care. Bye for now.